Welcome to the November 25th, 2019 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. Thank you for joining us for our fast-paced tour of the global financial markets. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman. The fast-paced tour with portfolio building discussions for 2020, building for success for the next 10 years in a high cash flow portfolio is our focus. Dow Jones Industrial Average 3-year chart from 2017 through the end of this year. What's the news this week? Well, the Dow hit 28,000 for the first time in history. We had said progress in the U.S.-China trade negotiations when we were sloshing around at these points. We said progress there could actually lead to a 28,000 Dow, a breakout of this trading range, which we've been discussing right here on YouTube and at NetWorthRadio.com. That was 22,000 on the Dow last Christmas. Much different picture. What's changed? Those headlines of a trade war-driven global recession and slowdown, well, they didn't materialize in 2019. The Fed reversed course, so we're going to look at some fixed income strategy. But first, U.S.-China trade negotiations. What is happening to GDP right now? This chart shows actual GDP, and inflation has stayed relatively low. It's 3.8% in China, 1.8% in the United States. The economy for the entire world, $86 trillion. The United States poised to cross $21 trillion for the first time in history next year. We've got the Eurozone. Everybody's growing at about 2% here. India actually at 5%, China 6%. They got set back, and now you have two negotiating teams. Kudlow, the head of Trump's team, and Xi's team, they've institutionalized ongoing trade negotiations. It was too much to get done on all those deadlines. And, of course, intellectual property theft at the top of the list. That's a positive development because it's an institutionalized negotiation that probably goes on for years, even decades. And that's part of the optimism that you see with the Dow. No, we did not have a recession this year. We're sitting at about 2% growth. Boring but stable. So the forecast for 2020, boring with scattered surprises. This is the interest rate picture. T-bills and the Fed funds rate right at 1.5%. What does it mean? Federal Reserve reversed course, and they cut rates 3 times this year. There is no projected major change in rates by the Fed for next year. They're just going to hold their course. Alex Tolene and I on the NetWorthRadio.com broadcast next week, we will actually cover what's going to happen with the Fed balance sheet. What does it mean? Notice this right here. We've got interest rates on prime loans. That's what the banks, they loan money at prime rate, 4.75%. There are still floating rate loan funds for the safety and income portion of the portfolio that are paying over 5%. A relative bargain compared to the duration risk of longer dated bonds. And with that 30-year treasury near 2%, there's not much reward for reaching for yield at this point. So controlling duration risk for the safety and income portion, shorter duration funds, along with good safe cash. Money market yields are headed back to about 1.5% after topping 2%. But that's a safety and income read. The floating rate loans and the shorter duration corporates, a favored category compared to taking duration risk. Oh my God, what's this? Well, this is the Cannabis Index. Well, cannabis became extremely popular. You can see it here and here. That's the Canadian Horizon Marijuana Life Sciences Index. It was much like Bitcoin in 2018. Companies trading way above what they would be worth compared to other categories. What are you seeing right here? Tax loss selling. Wow. And this category is indicative of a bubble that burst. This index traded to about 1/3 of its former self, And it was the rage for traders, as you can see back here in these peaks, and even earlier in 2019. Tax loss selling, if you were going to get into this category, people that have a loss, they'll sell it to control next year's taxes. That happens in mutual funds as well. And that apex of tax loss selling is approaching. It's usually around mid-December. And I'm going to show you a couple of categories that we like better than the pot stocks. But I wanted to show you a bubble like Bitcoin because it was very dangerous for traders, especially from March through the end here of tax loss selling season. Not a recommendation for your portfolio till you come down and get a plan. Let me show you one of the categories that we favor as we go forward. The solar index also had a sell-off that started in September, tax loss selling impacting here, and those companies actually beginning to make money for growth portfolios. They don't have yield. Where is the yield right now? Well, this is the energy infrastructure index, and so we have a basket here of energy infrastructure funds. Think pipelines for oil, liquid natural gas. And what you can see here is intense tax loss selling pressure. The total return still about 7.5%. The Dow at 20. This category's lag behind. In fact, Apple's worth more than the entire S&P energy complex. This is a subset of the pipelines. The good news here is you can pick up yields of 8% or more in stocks that are half price. If we had a longer term chart, you'd see it's less than half price. And tax loss selling is handing us bargains. Total return this year still relatively good compared to a target return of 7 to 8%. But this could be a great trade between now and January 31st. The January effect is when tax loss selling ends. I'm Spencer McGowan. It's always a pleasure to be with you. Be sure to subscribe because when there's fast-breaking news, we'll put out special editions. You'll get an alert right there. Thank you for joining us at YouTube McGowan Group. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who are devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.